Hey, how's it going? So today we are going to be talking about a trade that I put into my trading playbook today, and I thought it'd be a good exercise to kind of talk through it. I always like to start with looking at the overall market context. So as you can see here on the chart, we have a daily chart of the SPY. I don't even need to draw you a trend line for you to see this nice uptrend we've had since the October lows back. This October 2023. We're recording here on the 22nd of April. You can see here how we made all-time highs back here in the beginning of April, and now we've been pulling back ever since. And coming into today's session, we had 6 straight down days. Today on a Monday, everyone was expecting a little bit of a bounce, which is what we got. We're going to drop down to 5-day, 15-minute here. Found support here, gapped up, sold below it, bought into resistance back down, bought into resistance back down. So we've been just slowly trending down. There was kind of this area on Friday where you can see right around 498 that there was resistance that the market couldn't get up above. Today, this morning, we gap up and open. This line here is actually the pre-market high. This is a chart excluding all the pre and post market, just to have a more intraday look for now. So the SPY couldn't get above that pre-market high in the early part of the session. As you can see, we were bought back up into the midday, sold off right below that level, and then we pushed that back above through it. Got almost back up to this resistance level and then closed a little lower, just under 500 for the SPY. So that was today's action. Let's flip over to take a peek at the NASDAQ. So similar story. Nice uptrend since October. Peaked out in late March. And we've kind of been consolidating in this range here. And then in the past 5-6 sessions, we've just sold off. And it was a huge sell off on Friday. So like I said, everyone would be expecting a bounce today. Same story, 5-day, 15-minute with no pre or post market data. Here on the 15th, consolidated on the 16th, sold below those bottoms, tried to get back up above, couldn't find enough buying, and then we sold lower. NASDAQ's been moving much more straight to the downside without any respect for any previous day's levels. You can see down here on 414 at the end of the day on Friday, though we came down below it a couple of times, we were bought back up above this level a few times going into the close on Friday. So today we gapped up right up into this mid-afternoon resistance level that was put in on Friday, and then we sold down, found some support around around the low of Friday, and then we're bought right back up. So then the trade for today was a trade in AMD. Let's go to a daily time frame here. Similar story, but much more drastic price movement, obviously, with the single stock name relative to, or compared to an ETF. We broke out, gapped up a number of days, and then here on the 8th of March, we had that blow off top, bought way up to 227 all-time highs, and then sold down. And ever since then, we've been kind of downtrending on this name. We came back into this channel we were in, this consolidation channel, and actually have sold back down even below it. So on Friday, you can see we came down to 144, 145-ish through this level of support / resistance that we've seen back at the beginning of the year. We sold down back below this $150 level. 150, all the whole numbers, the 10s, the 50s, the 100s. Those are always huge psychological levels just for market participants. And then coming to today's session, we were beneath that level. So if we come in, look at the same thing, where is it? 5-day, 15. Okay. So yeah, had been trending to the downside just like the markets. You can see here on Friday, with the big sell-off in the semiconductors. We flew right through this $150 level. Found some buying down here, and then we're bought up to just below 150, and then couldn't break through it. Sold back down to the low to a 145.20 spot 29. So then this morning we gapped up like most things, and this is where the trade is going to come in. This is Friday. This is that 150 level. Sold down, bought back up a little into the close on Friday. Sold lower in the aftermarket. In the pre-market here, we gapped up a bit. The reason why this stock was in play was because everyone was watching the semiconductors after the huge sell-off. It was like a capitulation down move we saw in the semi space. NVIDIA lost like $212 billion in market cap. So overall, I think most of the semiconductors were quite oversold because it'd been Friday was kind of the crescendo of the down move, but they had been moving to the downside. So just the fact that we're expecting so many eyes to be on this name would put it in play in my mind, and undoubtedly many other people's minds as well. So our level we're keeping in mind is that 150 level. Off the open, we open around a little over 148. In the first kind of 15 minutes, kind of operated in this range between this pre-market support level at 147.5 and the 148.80, 149 level. A lot of this first 15 minutes we would just call price discovery. There's not a real direction yet very often, especially after the movement we saw on Friday. There's people that probably want to buy the dip. There's others that think it's still going to go down further, so we're seeing a lot of up and down movement. But here at around, 644, 645, we got a breakout of this high of day at the time. So we break out above this level, and then we get right up against this $150 level. Now there's a couple ways to play this, but it's important to kind of watch the price action for a confirmation of what you believe. So obviously at any time there's a resistance level or a support level, there's two ways it can go. It can either break out or it can break down. So in this case, we were expecting, based on the resistance from Friday, we're expecting it to come up against resistance, test the resistance. Sometimes they'll break through the resistance, but then the hope is the sell-off that we actually ended up seeing. But at this point, when you're watching it up here, you don't know for sure yet when you're seeing these candles what that is going to be, if we're going to see a pop to the upside or we're going to see the breakdown lower. So when we get up here, what I'm watching for is we see that the price comes right up like 149 spot 88 and sells down here, right up against it again, sells down, closes lower, comes up around the same price, comes down again, is bought up again, but still closes below that level. So we've seen 4 to 5 minutes of the price kind of holding under that, and meanwhile the volume at this time is pretty much unchanged. Like we had a couple big spikes up into this level, and now the volume has just kind of been cut in half more or less. So then what we're looking for is kind of a change in character here. So we'd be expecting a move with volume in one direction or the other. At this point, it's a better idea not to be, in my mind, it's a better idea not to be in the trade yet. Many people would sell into this level, place a stop a little bit above 150. However, in my mind, the higher probability setup is to wait for a change in character in the price action. And when we're getting this little consolidation up here, we're not positive if it's price acceptance of this level before we blow through that high day, or if we're going to see the sellers take control. What I'm looking for is a spot where we know and we can tell that the sellers have taken control. So we got this range from 149.50 to just under 150. and we've been operating it for a couple minutes here. We have these two candles we push up towards the top, and then we sell down to the bottom of that range. We kind of come to push up a little higher at the top of this wick, but then sell lower. This candle here is the big one that would give me confidence to go short in this scenario. So once we see this start to push downwards, that in my mind is showing us a change in character. Other reason other than the visual of the actual price is we see a little bit of a spike in the volume here. It means as the price is decreasing, the volume's picking up, which gives more credence to the move in my mind. So you enter aggressively at the break of this level. You place your stop up above the consolidation right around this red line we have here. And then after we see this big move down, we're hoping to see continuation and selling, and the sellers to remain in control. So we sell down about a little close to $2 here, $1.50, $2. We get, so that's our first wave down. We get a little bounce, some buying, but then we can't get back above this 50 period moving average, and we put in a little bit of a consolidation. So we can see that the sellers still, it gets to these levels, tries to push up, push down, tries to push up, comes back down. We can still see that the sellers are in control of this, so sells down, consolidates, and then we get another big volume down candle. And then we see a little bit more consolidation, holds below this 200 period moving average, and then we get our final move down. After it hit this point, that was the low of the day, so get this whole move down here, and then we had higher lows and higher highs as we kind of came back out through the rest of the day. But this, in the first hour of the trading day, was the whole trade essentially. It's more or less a scalp. I personally would probably treat this as just a short scalp down to this 200 period, or at least place a stop where I was saying around here, and then just see what happens. I would probably move it lower to here, like I said, and then maybe use the 200 period as the final stop here, and then take some off as you get down further. There weren't any further points of support really, major ones. 145 flat could be seen as a support level just because of this psychological aspect of it, and the fact that that's around where we based out at the end of Friday, as well as the tail end of the post-market trading on Friday. So that is the trade. That's the trade today that I thought seemed the most simple after looking at it and breaking it down. There's, as I'm sure everyone knows, it's not a simple game making these trades, and hindsight's always 20/20, and seeing it in the moment is never the same as looking at it afterwards. But I've been playbooking trades for probably 6 months now, and felt like it was a good exercise to kind of talk through them and just share what I'm thinking, for better or worse. I'm not an expert by any means, not a financial advisor, but I thought it'd be fun to share thoughts. And a very important part of learning to be a better trader is creating a playbook per se, a playbook of trades, so that next time something similar to this presents itself, you or I can have a better idea of how it might work, how best to set, how best to enter, how best to set your stop, when to exit, so you have the best risk reward and maximize potential profits with the least drawdown while you're trading it. So I love the playbook idea. It's preached by Lance Brightstein, um, Mike Billafiore has his book, The Playbook. I'd highly recommend reading it just because it talks about the importance of this kind of thing. But yeah, I'll probably occasionally post some videos on here. I just thought it'd be fun to talk through things, maybe see if any other people have anything to say about stuff that I'm seeing. Maybe my thoughts on this are completely backwards in someone else's mind, and I'd love to hear reasoning for the other way. But at the very end of the day, it's just fun and trying to learn and improve. So yeah, that's pretty much it. I hope that everyone has a good day, and remember to trade your playbook and playbook your trades.